off. Americans return to space as Discovery clears the tower.
Welcome back, TTMTrades. Hey, we're gonna talk about the market today, okay? Because I know we've been riding this thing down from the top all the way down to the bottom, especially for my, TTM to the moon community, man, in my Discord. So I just kind of want to address what we see going on with the SPY, okay? Because I know a lot of people are still bearish on this, and they're seeing, the SPY rally along with the Nasdaq and the Dow, and it's throwing a lot of people for a loop, and it's confusing them, and people are holding puts and they scared. I'm still holding puts on SPY, but they're 3 months out, right? So I'm currently down on them, and I'm perfectly fine with that because the overall trend is what I'm monitoring, okay? But don't get me wrong, we're still playing this short-term rally to the upside also, all right? So just with the SPY, you all have to understand, like, a stock, a ETF, anything, it can't just drop straight down non-stop continuously and not have a bounce sooner or later, right? Just like on a rally, right? When Tesla had this big rally, late 19 going into 20, it went up, it came down a little bit, went up, came down a little bit, went up, came down a little bit, but the overall trend was up, right? So it's the same thing with the SPY, right? The overall market. You can't just fall to a bottomless pit and not bounce sooner or later, okay? And that's what I think we're having. We're having a dead cat bounce, and you got to understand that the sentiment in the market, yeah, it's still the same, but it's kind of sort of changed just a little bit with this stimulus package, right? I call it a sugar rush. It's giving the markets a sugar rush, okay? So let's take a look at the markets, okay? So monthly chart on the SPY, we had that crazy dip all the way down to the low of 218, and now we rallied back up to 261. Still waiting to close the month of March out. Weekly start chart still in a strong downtrend with a lot of overhead resistance if it wanted to try to rally back up, which is what we're looking at here as far as 270 and 282. Daily chart, as you can see here, let me close these lines out. A lot of overhead resistance if it wants to rally back up to its highs and try to consolidate and get back into an uptrend. Still a lot of overhead resistance as far as sitting in that 280 to 285 range all the way up to this 300 range, where we was trying to break above that area back when the whole trade war was going on between Trump and China, okay? And then we finally broke through 300 and had this major rally. So it's still a lot of overhead resistance that the SPY has to get through to get back to where it was. Then it has to consolidate, and then the sentiment and everything along with the news and COVID-19, that whole sentiment has to change for the market to be a believer and buyers to come back in and then push this back up. Not only does it have to do all that, you still are going to have data that comes behind this, such as quarterly earnings, that is going to reflect the working class and the economy being shut down due to this COVID-19 virus. So it's still a lot of flawed data that's going to stop the SPY from rallying and running into all-time highs, okay? So what you're getting here is you're getting a bounce, okay? It's the same bounce we had back in early March that was freaking everyone out. When we dropped from 337, as you can see here, down to 283, had this rally up to 312, and then we started fading out again. Now we're getting another bounce and another rally. Okay, now where do I think it's going to go? I think it's going to push up to that 280 to 285 range, maybe even low 290, and then I think the sugar rush is going to fade away, consolidate, and then we're going to head back down, okay, to either test this bottom that we created to create a double bottom, or we're going to break straight through it, and then now we're going to start creating lower lows, okay? But that's going to happen weeks from now, maybe a month from now. It's going to take time to build into that, okay? And what I think, this is how I think it's honestly going to play out, just me, right? Because a lot of the news is priced in, okay? A lot of the news is priced in. New data points are going to come out here soon, quarterly earnings, things of that nature, like we just talked about. But what I think is we have this stimulus package that's pending, right? That's been passed. We're still waiting on it to get approved at I believe the Senate, or the Senate already approved it. I got to go back and check up on that. But I know we're still waiting on it to get approved at a certain level. And that's the market's optimism right now. Okay. Not only that is you have Trump also saying he wants to open the economy back up on Easter or April 12th or whatever day he said, right? So we look at April 12th. I pull up the calendar. April 12th is give or take give or take 2 weeks away. 2 weeks and some change. So I think for the next 2 weeks, the market is going to rally. It's going to rally. It's going to rally up, consolidate, right? A little bit intraday, and then it's going to rally up until it hit these hard areas of resistance that's sitting at 285 and 302. And we're looking at the daily chart here, okay? And and granted, these lines are going to continue to come down to adjust, right? So it'll probably come down to right around 280, and the 150 SMA come down to right around 300. But the lines are going to continue to adjust to the price action. But I think it's going to push up into those areas of resistance, and then that sugar rush is going to fade away, right? But again, this is how I think it's going to play out. We got 2 weeks till Trump wants to open the economy back up. The stimulus bill is still waiting to get approved finally, or whatever the case may be. So you're going to have the rally, right? The numbers are still off the chain as far as COVID-19 goes. April 12th is going to roll around, and Trump advisors are going to tell him that he cannot open the economy back up because of how bad it's become, and he needs to allow this more time to pass because he still hasn't hit the peak, and for it to kind of, the ebb and flow for it to come back down. We still don't even know if we hit the peak, and we're starting to drop in numbers. We still haven't even got those data points yet, and we're already 2 weeks after him talking about opening the economy back up. So I think that data is going to roll around, and then he's going to make the announcement that he's unable to open the economy back up, and you're going to see that sentiment change just like that, and the market is going to drop hard from these key resistance areas, which are sitting right at 285 and 302 right now. Okay, and plus you got to think about it. The bears have been rallying this. The shorts, bears, they've been riding this wave all the way down for the longest, right? From a technical standpoint, it's getting oversold on the weekly chart. You got good news coming out, quote unquote, with the stimulus package, and Trump wanting to open the economy back up on the 12th. So if I'm a short and I see the sentiment slowly changing, I'm going to cover my position to get out. And how do I cover my position? I have to buy back into it. I have to buy shares to cover my position, right? So you get shorts covering. You got a new wave of buyers coming in because everything's at a discount in their eyes. And you have the sentiment about the stimulus package going on. And then you have Trump talking about opening the economy back up on April 12th. So, of course, you're going to get this short-term rally, right, which I call a sugar rush. And that's what you're getting right now, okay? And again, I know I keep saying it. We're going to push up into these areas at that 285 to 300 area. And it's going to be right around that time where Trump going to have to open the economy back up. And he's going to make that announcement that he can't do it because of the numbers and, what his health officials are telling him. And the sentiment is going to change immediately. And then we're going to drop back down to either create a double bottom, or we're going to break through that bottom and create a lower low. Okay. So let's look at the chart intraday, all right, on the spot. 5-minute chart, it's already above its 150 SMA, and it's constantly pushing through its band. So there's really no resistance areas on a 5-minute chart for me to identify. 30-minute chart is above its 150 SMA, and it's constantly pushing up above its middle BB and holding above its top two bottoms of band. So there's really no resistance areas for me to identify on the 30-minute chart because it is in a very bullish, strong uptrend. We get to the 2-hour chart. 2-hour chart setup. Take these lines off right here. Look at the 2-hour chart. Same thing. It had a bunch of key resistance areas. That bottom one standard deviation Bollinger Band, which acts like a 10-period simple moving average during the uptrend or downtrend. You can see it was constantly acting as resistance. Every time it broke through, it failed, and now it finally broke above that one standard deviation Bollinger Band and the middle BB, which is the 30 SMA, and now it's even above its top two standard Bollinger Bands to show that it is now in an uptrend, okay, with the volatility very low and starting to pick up. And the reason the volatility is picking up because it's reflecting the price action now breaking outside of the bands as far as on the 2 standard deviation, okay? And the PMO is very strong and ticking upwards, all right? So we're in an uptrend. Intraday, we're in an uptrend, okay? Daily, we are still in a strong downtrend. Intraday, we're rallying. as far as intraday charts go. Okay, the information will soon bleed over into the daily, but the 2 hour chart really doesn't have no overhead resistance because it's breaking outside of the bands. You got the 150 SMA sitting right here at 294. That will continue to adjust as time passes by, which I think that will continue to come down and correlate to the 285 area that we're seeing right here. All right, as we give the 2 hour chart more time to develop. Okay, but on the daily chart, we do have key areas of resistance because again, it's been breaking outside of the bands this entire time. It's finally getting back within that one standard deviation band to show that the downtrend has ceased for a said moment. And now we're looking to kind of rally. Okay, so on a day-to-day basis, that 285 and that 302 as of now, because the bands will continue to adjust to the price action to reflect resistance and support areas, are the key resistance areas that the SPY needs to get through. Okay, if it gets above that middle BB, that's bullish. That's a good look. It shows that now the strong downtrend that the price action was in, it's now consolidating. Okay, but again, you still have that weekly middle Bollinger Band sitting at 302 overhead, as you can see here. Weekly middle BB sitting right at 304, and it'll adjust to match up. It's off by $2, give or take. But that 302 to 304 is still sitting overhead, even on a day-to-day basis and on a week-to-week basis. Okay, and again, we only got 2 weeks before Trump tries to open the economy. All right, so again, I think in that 2 week time span, we have a very bullish rally, where we rally up to that 280 to 285 area. If it's very, very bullish, then we'll push up to that 300 area, and that 300 area is going to be a very strong area to break through, because again, that was the prior resistance in mid 2019 when the stock market was trying to rally, pushing up to 290. 297 fell, 298 fell, and then it consolidated here for the longest and then finally broke out. Right, so that's going to be a strong area of resistance for the daily chart to try to break through. Okay, but what you have here is you have a high with a low, a lower high with a lower low, if you want to count these little drops right here. But no, we'll just do this. You have a high with a low, lower high with a lower low, and then you're going to have another lower high, which is going to push back up to the 280 to 285 area, which correlates to this area back in here, and back in this area where it was old support, as you see here. If it's very bullish, again, we push up in that 300, and then the price action phase. Okay, because when you push back into these areas, who you think is going to pound into the SPY in those areas? The bears, the shorts. They're waiting to take their positions. They're waiting for the daily chart to push back up into these areas so they can pile back into here and ride it back down. They've already made their money. They rode it from here all the way down to 218. They made their money. Wash their hands. I'm done. Bulls, y'all have fun with it. Y'all have fun with y'all short-term rally, stimulus package, economy being opened back up. Cool. I'm going to sit on the sidelines and I'm going to wait till y'all get to these areas of resistance. And then we're going to pile back in and ride this thing back down. Right, so they're sitting on the sideline waiting. So these are key areas of resistance. Okay, so in the short term, what I want to tell a lot of the traders is, if you're holding puts on a more long-term basis, June, July time frame, which I know a lot of us are, I'm going to continue to hold mine because I don't think the sentiment is going to hold up very long. All right, I think we get this type of sentiment to mid-April, and then once we see that the economy is not going to open, there's no more good news flowing in, and you hit those key areas of resistance where the bears are waiting to pile in at, then the sentiment changes, and now we go back lower to create a double bottom and or create another lower low on a week-to-week, month-to-month basis. Okay, so if you have time on it to where the theta isn't killing you, then you're good, right? If you got a month left on those puts, then it's best just to cut your losses and ride this short-term trend up to that 280 to 290 area as we're seeing here. Make as much profit as you can, and then go long back on puts when the market reverses. Okay, and that's just me personally and what I think is going to happen. Okay, but yeah, intraday, we're very bullish right now. That's a very bullish setup intraday. On a day-to-day basis, it's still very bearish. Week-to-week basis, it's still very bearish. On a month-to-month basis, you can see that it broke outside the bands, but immediately recovered, and now it's back above its one standard deviation Bollinger Band, which is currently sitting at 255. Okay, so Play the short-term bullishness, make as much money as possible, profit, and then soon you start to see some weakness as we push up into that 285, that 280 to 290 area right here. As we get back in that area, and I start to see the price action fading and the momentum fading, then we'll go in for some puts and then go from there. But till next time, man, TTM trades. The overall market is very bullish right now on an intraday basis. Play the short-term puts, make some quick cash, and then set up for the next leg down when that time comes. And I think that time will come mid-April. But right now, the overall sentiment in the market is very bullish. So play the bullishness, make that money, and then we'll set up for the next leg down. But till next time, TTM Trades, I'm out.
Houston, Tranquility Base here. The Eagle has landed.